Every crash feels like chaos. The headlines scream unprecedented. The talking heads swear they didn't see it coming, and ordinary people lose everything. But what if the crash isn't the failure of the system? What if it is the system? Over the past century, global wealth hasn't disappeared in crisis, it's changed owners. What looks like collapse for the many becomes clearance sales for the few. It's not luck, it's structure. And it's the engine behind every so-called recovery. Between every boom and bust sits a network: central banks, asset managers, hedge funds, and corporate insiders. They don't predict the future, they design it. Crashes aren't random shocks, they're built into the operating system of modern finance. When times are good, cheap credit floods the market. Companies borrow, consumers spend, and assets inflate. But inflation always outpaces wages until the bubble bursts and everything resets upward. Every expansion is funded by debt. Every bailout rewards those already holding the debt. And every rescue turns new money into old wealth. Markets don't move on math. They move on emotion. Panic isn't a side effect of crisis, it's the product being sold. When fear hits, the crowd sells what it loves most: their homes, their stocks, their peace of mind, for pennies on the dollar. And when the dust settles, the buyers waiting in the dark aren't panicked, they're patient. The rich don't sell time for money, they sell debt for power. They borrow when rates are low, buy real assets, and let inflation erase the cost. While the working class pays off credit cards, the wealthy leverage loans to buy entire companies. During 2020, governments printed trillions in stimulus. Half went to corporations and financial markets, not citizens. The result? A historic boom in billionaire wealth while the middle class shrank again. But the next transfer won't just be financial, it'll be digital. We're entering a world where every asset, transaction, and identity is tokenized. Data replaces dollars. Access replaces ownership. The goal isn't equality, it's efficiency. Ownership moves from citizens to corporations, from paper deeds to digital databases. Once everything is digitized, control becomes code, and code can be changed. When markets rise, profits are private. When they crash, losses are public. The cycle repeats because we let it. Politicians promise fairness while accepting donations from the winners. They tell you the market rewards risk, but in this system, risk is outsourced. The reward goes up. The risk trickles down. The wealthy don't predict crashes, they prepare for them. Cash positions, hedges, private equity, dry powder. They wait for blood in the streets, then buy what the desperate must sell. When the next crash comes, they won't panic. They'll go shopping. The real transfer isn't just wealth, it's control. The ability to buy influence, shape policy, and own the media that tells the story. When one class writes the rules, the game never ends. It only resets. This is why every crisis concentrates power. Each rescue package is a transaction, not between rich and poor, but between the rulers and the ruled. You can't stop the next crash, but you can stop feeding it. Understand cycles. Save liquidity when others spend. Invest in skills, not just assets. Own what you understand. Diversify beyond systems that punish curiosity. Freedom doesn't mean escaping the system, it means seeing it clearly. Because once you recognize the pattern, you stop being a pawn in their reset. The crash is already loading, not a failure, but a feature. They'll call it unforeseen, historic, or unavoidable. Don't believe it. Every crash is a decision, every bailout a transaction, every transfer a choice made by those who know how the game ends. The rich don't fear collapse, they wait for it. The rest of us just haven't learned how to see the opportunity before it's gone.